Thank you very much for joining us today, everybody, for Financial Wellness. Just a couple of quick notes before I turn it over to our featured presenter today. My name is Matthew. I'm with the Tampa Hillsborough County Public Library, and I just wanted to let you know to make sure you check out our website for other upcoming events. That is hcplc.org. I'll post that in the chat in just a little bit. If you have questions, if you're watching this live, I should say, if you have questions, please do post them in the questions section of the GoToWebinar control panel. It's that like control panel that has all the little options that you can turn on and off, and we will do our best to get those answered for you during the session or at the very end. And there will be a brief survey right after the session. It only takes a couple of minutes. Please do fill that out for us so we can get your feedback on today's session, as well as help us plan for future events and activities. And without further ado, I'm going to turn off my webcam and kick it over to our presenter, Lori Nadglowski with Laurel Wealth Management. Thank you very much for joining us today.
Great, and thank you for having me today. And thank the library for allowing me to do my financial wellness presentation. This is a three-part series on financial wellness during uncertain times. And I'm going to go over the three-part series. Last week, we went over identifying where you are today. Today's topic is budgeting when cash flows may not be certain. And the part three is the recovery. You know, what do you do after we've gotten through this? How do we get back on track? And how do we move towards a lifetime of financial wellness? So the first thing I'm going to go over is just a little review of what I went over last week in case you missed it. The first part was, well, financial wellness, and what is it? It's about cash flow, and let me go ahead and I'll advance my screen. So here's really the keys to financial wellness, and this is going to be the keys whether we're in uncertain times or in better times. The first is your cash flow, and we're going to talk about that today, looking at the expense side of your financial life and your budgeting. How do we improve it? What are you, what do you have for expenses? Protecting what's important to you, that's on the insurance side, and that can be on your life insurance, disability, your homeowner's insurance, your car insurance, protecting your biggest asset, which is really your income and some of the other things that you own. How do you save and grow and help secure your retirement? So these are really the the keys, and this is going to hold true now and it's going to hold true in the future, but we're going to kind of concentrate on that improving your personal cash flow in this series. Because I know that it's uncertain for some people, and you need to go through and figure out how to budget during this time. So last week, we kind of tackled the where are you today? So how do you know what you have? Getting a where you are at a point in time, and this is something that I do with everyone when I'm doing financial planning. So I'm going to kind of walk you through the steps of the financial planning process. We're going to tweak it a little bit just to look at more of a short-term time period than a long-term time frame. When I'm doing budgeting and planning for someone, I'm really looking at their long-term. I'm trying to find out where are you today, where do you want to be, and how are we going to get you there. And for this series, we're looking at how do you identify where you are today and to cover the expenses that you have. So where you are today is what resources do you have to fund your goals? And your goals right now are really to cover your expenses. So what do I have available to be able to cover my expenses? And that's going to be from a few different places. What income do you have coming in, and whether it's from an employment, maybe a part-time job that you have. It could be from unemployment, it could be from some type of severance pay, it could be from dividends and interest that might not be as common, it could be from Social Security, it could be from disability payments, but where are you getting your income from? The second one you walk into is what do you own? And those are your assets. And so some assets can be liquid, like cash in your checking account, where you can walk to the bank and you can take out money or go to an ATM and take out money. And it could be all the way over to things that are not quite as liquid. It could be like a savings bond or more of a long-term investment where you cannot just walk into the bank and say, I'd like to have the money, or you can't just walk out and sell it easily. It takes time to convert it into cash. And those other assets might not just even be investments. It could be that you own a piece of property, or you have something that you'd need to sell. And so those actually can go into your plan for how you're going to cover your cash flow over the short term, but they probably aren't as reliable, and it might take you more time to convert them into cash. And so that's what we want to identify with this. What are those resources we have immediately available? What are the things that might take us a little bit longer to be able to convert them into cash, and knowing when we need to be able to do that. The last one is the review from last week is, what are your expenses? And this was not looking at going back and cutting down anything, but what am I spending? And you can go back and look at your checking accounts or your credit cards, or however you spend, or however you spend your money, receipts that you've saved. Go back, what am I really spending? Most people believe that if I asked them what their budget was, they would give me a number that was probably less than they actually spend. Your bank statements and your credit card statements are the best indicator of your spending habits. So after that, after we've gotten through that, we're now on today's topic, which is how do you build a budget? So this is the budget that what we looked at last week. Your first expense is we're going to look out for 60 days. So we're going to do a 60-day rolling budget. What do I need to cover in the next 60 days? We're taking it down a little bit to make it a little more manageable. You probably can foresee what your income is going to be the next 60 days, and that's why I kind of picked that time frame. But every month, at the end of the month, we're going to go back and we're going to look at the next 60 days to see what our resources are and what our expenses are. So now that we have all of that information from last week, we know what assets we have, we know what resources we have, we know what income we have, and then we've got a list of all of our expenses. What do you do with those expenses? Well, if you look back at the budget allocations for a typical household, we're going to look at housing, food, transportation, healthcare, and savings is kind of on the back burner right now. So how much, what are our housing costs? What are our food? These are all the needs that we're looking at. And if we go back to the budget, we have the housing, we have mortgage payments, you have rent, utilities, homeowners association fees, insurance, and phone. Those are all considered a need. Those are things that you need in order to live in your house. You want something so that your home will not be compromised, that it's going to be, put you into foreclosure or put you into a bad place. So those are the things that we need to cover first. Then let's move on to food. What have you been spending? And then what can you spend? So go back on your food budget. You can go back and look at your grocery receipts, look at any time that you've gone to the grocery store on your debit card, look on your credit card statement, and pull together all of those Publix trips or whatever grocery store that you use. Another way to do this that might be a little bit easier, because this is a very manual process, it's a time-consuming process, but it's something that can benefit you in the end, is some of the online systems such as mint.com. Your bank might have this as one of their benefits, and also your you can look at a couple other places. I know that banks have it, and there's some other, like your budget will pull in all of your data from your checking accounts, your credit cards, or even some of your liabilities like your car loan and things like that. They'll pull it into that, and then you can see where you've been spending money. It does take some time with this one too, because you have to go in and you have to categorize the expenses. They will know some things. They'll know that what a grocery store is, or they might know what Starbucks is, but there might be some descriptions that don't come in clearly, and it will put it into an uncategorized expense. So you have to spend a little bit of time on your end putting it into the right place. So look at what you've been spending, and there are some tips for saving money on this, because this is probably one of the items on your needs side that has the most flexibility in terms of what you can spend versus some control over it. You're not going to have any control over your mortgage payment. in terms of how much you need to pay. You're not going to have any control over your rent. Your utilities is whatever. You can try and conserve some of your utilities, but for the most part, you're probably going to have the same amount that you spend each month. So some saving money is to do some meal planning. It means you have to sit down and think about really what you're going to spend over the next month or the next 2 months in groceries. What are you going to do this week in terms of making meals for the family? Shop online ads to see what's on sale. You can use the store app for coupons when you're in the store. You can also look at joining with another family to buy in bulk. I know there's a lot of buy one, get one free that I know when I shop that sometimes I don't always want two of everything that's on sale or everything that I have in my cart. So find another family that it might make sense with. You can kind of split, maybe do some meal planning together and get a discount on all of your groceries. You also can look at cooking versus buying in bulk or convenience foods. Next, go into your transportation. That's going to be car ownership. What are you spending on gas? Your loan payment and insurance. Do not stop paying your insurance. It can, you don't want to get into a car accident and not have insurance. It's, first of all, it could hurt you worse than the payment that you're making. But it also could be very expensive to get insurance. Again, if you haven't had it, it's going to be reported to the state, and you don't want to get into that type of a situation. Finally, public transportation is another option too. Fourth, we're going to look at healthcare. How much are you spending on your health insurance? That's something that you should try to maintain or look at other options for it. And what do you need for work or for school? That might be internet access. If you work from home and you have a job that requires you to be on the computer, internet access is going to be a need for you. Childcare might be a need for you. If you can't work unless you have a place for your children to go, then childcare is going to be on the list of the needs. So now we've got all of these expenses down. This is a budget, an example of a budget, and these are really the most of the needs. I mean, you'll see some things in here like lawn care. That might be something that you can drop. That's probably it's under the maintenance of your home, but that might be something that you have to go back and start doing again. Then we also have the second part of the budget that has more of those personal and family expenses that have more of those discretionary spending in it that probably can be where we start cutting. You know, taxes are, of course, going to be part of your paychecks, but on the left-hand side where it's more the discretionary expenses, clothing, some of your books and magazines, those might entertainment expenses, those might be the things, and gifts, those might be the things that you first are the ones to cut out. Okay, so we got all your expenses listed. Use Excel if you need to, and then let's review them. Are there opportunities to save money? We talked a little bit about going and shopping, and probably the biggest place is going to be on food. But what about your insurance cost? Have you shopped it lately? Sometimes we just get too busy to go back and just let the whatever the bill comes in is what we pay. We don't go back and look at it to see if there's been opportunity for savings. So that's something you can do now, is call around and see if there's any opportunity to save money. Look at your paycheck. What is being deducted from your paycheck? Are you having anything extra that might be being taken out that you can stop right now? Your retirement expenses, if you are at a point where your income and your expenses exceeds your income, it might be a time to look back at cutting back on some of those temporarily. That is not a permanent cut, but it might be increase your cash flow a little bit for a few months. But go back on your paycheck and see if there's anything where you can make some adjustments. It also might be in terms of your tax withholding. If your income has changed significantly in your family, you may not be in the same tax bracket anymore. Talk to your tax professional to see, but that might also be something that can save you some money in the short term. Next, we're going to compare your expected income to the expenses. So where are you? So we've listed all of the amount of money that we expect to spend over the next 60 days. And then we're going to look at the income. What's happening here? So there's really 3 different things that can happen. You can either be, you have more than enough, which is a great position to be in. You can have just enough to cover your expenses, which means that you're pretty much even. Your income matched your expenses, and that's not a bad position to be in, or you could be short. So we'll focus on those 3 to see what kind of things can we do. All right, you're more than enough. So the next 60 days, we know that our income that we're expecting is more than our expenses that we have on the under list of the need. That might not mean that all of your expenses are covered, but it means the ones that are necessary for you to work, for you to have a shelter, and for you to have transportation are covered. So when you're in that position, let's look to your next debt. Debt would be the first one that I would look at. And credit cards is the main one. Credit card expenses can end up costing you quite a bit if you go into a default. Look at your credit card statement. It will tell you, if you look on the back of it, it will usually have all of these disclosures that you probably don't look at every month, but there are some disclosures that are important to read. You need to know what your current interest rate is you're paying, and what could the default, what happens if you go into default? What happens if you miss a payment? Missing a payment will impact your credit. It will impact your ability to borrow money in the future, and it will impact the interest rate that you're going to pay. So missing some of your debt payments can have some very long-term impacts on you and can be expensive for a long period of time. So making the minimum payments on your credit cards is important if you have the money to be able to do it. So if you have more than enough and you have debt payments that you haven't made, go to that for the next step. That's going to end up saving you money in the long run because of the penalty interest that can be applied on a credit card, and it just can get you into a cycle where it makes it very difficult to pay off the balance in the long run. And if you're past that and you still have some money, look to Conserve for the next budget. We looked at 60 days, so if you're in that 60-day time frame, there's not certainty within it, go back to then put it back into the savings account, and then we'll reevaluate it later and see if you need it for the following 30 days. So we want to keep that 60-day budget going, and we want to conserve as much as we can in terms of liquid assets. You don't want to go through all of your savings and then have to start selling things or liquidating things at a time that may be not ideal. So Conserve is the first, or paying off debt and then conserving is the next step. So if you have just enough to cover, I would still go back and look at those cost saving opportunities. Am I getting the best rate on my insurance? Are there people I can call and negotiate a better deal? Try and see if you can save more on your food, because that's probably one of the largest expenses that I see with people, especially in terms of spending where they don't realize what they're spending, dining out, things like that. Can I cut back there? And then we go into, okay, what if you're short? What if you just don't have enough income to cover the expenses? Let's start looking at other assets. When we listed the assets last week, we talked about an order of liquidity. If you have a bank account, that's liquid. If you have a car that you need to sell, that's not liquid. That's going to take much longer. But since we're doing a 60-day budget and we think we can we can meet the first 30 days, but the next 30 days are a little questionable. That gives you a little bit of time to be able to liquidate that asset. Be able to sell, if we'll use a car as an example, maybe sell the car so that the money will be available for the next 30 days in that budget. If you've gone through all of your liquid assets, there is some, the CARES Act did offer some provisions where you can access some of your retirement accounts. They allow you to access $100,000 of your retirement retirement accounts. Typically, you have to be over 59 and a half to avoid the 10% penalty. But if you take money out of your retirement account up to $100,000 per person, they have waived the penalty. And for only 2020, so anything that was taken out between January 1st and December 31st falls under this rule. You have 3 years to pay back your 401k or put it into an IRA. And you have 3 years to either pay it back or to pay the taxes. So that provides you with a little bit of relief and a little bit of time to be able to do it. Borrowing from your, I think they increased some of the provisions for borrowing from your 401k, the amount that you're allowed to borrow. Those are one of the assets to look at last to take, because you're really borrowing from yourself and from your future too. And the market has been down some, so you're taking money out at a time where it's lower, and you may have to replace it when the market's higher. So it may cost you more money to put it back in, the number of shares that were sold. Another place to look at is some community resources. Contact your church and some of the local organizations to see if there's anything that they can help you with that's on the list, in terms of helping you meet your mortgage, your rent, your utilities, food, and even some transportation. Forbearance and skipping a payment, go back to all of the places that we listed. If you have a federally backed loan, you are eligible to have forbearance, which means you can miss some of the payments. If you do go that route, make sure you have a plan on how to pay it back, or what the consequences of it means. Does that mean that they're going to expect payment all the way, at the end of the year or in 6 months? Are they going to have a balloon payment? Is it going to be added to your loan and then they're going to re-amortize it? Or are they going to add it to a couple more payments to the end of your loan? Find out what the consequences of doing it. If you have a federally backed student loan, you need to know whether you have a federal loan or a private loan. Private loans are not under the same rules as a federal loan. You would need to contact your servicer to find out which one you have. They are allowing, they are waiving interest and payments until the end, I believe, of September. Contact your servicer to find out exactly what the terms and conditions of your loan are. Don't assume that you can do that, because you may not have the type of loan that's eligible. And then go back again and reevaluate your expenses. You've got to start from the top in those prioritizing your needs, and see where you can cut back, or where we need to stop. So now we've gotten through the budget. We've gotten through the 60-day budget. After 30 days, go back and do this exercise again and look out for the next 60 days. So what's going to happen in the next 60 days? And do I have enough assets to cover it? Do I need to start liquidating things? And continue doing this process until you're into more of a period of certainty. And by period of certainty, I mean that your income, you have more opportunities with your income. You know your job is, you feel more certain about your job, your cash flow is returned to what it was pre-COVID-19. And then we're going to move into, and which is what I'm going to talk about next week, is more financial wellness for the long term. Now that we've recovered, we feel more comfortable with what we have. How do we plan for the long term and help position us so if something like this happens, and not necessarily this COVID pandemic, but what if something happens in terms of unemployment, or something that happens in your life that puts you into a position of uncertainty with your income? How do we protect ourselves so that we can get through these times with the assets available to cover us? So that's the presentation for today. I want to thank you for attending, and I hope you come back next week to hear the part 3, the financial recovery.
Thank you very much, Lori. We do have one question that from the attendees, but I want to remind those who are attending that in the questions section of your GoTo control panel, you can add questions. We do have a couple of more minutes here that Lori can take questions. The first question is, Lori, that it has to do with, you mentioned credit cards earlier. They were asking about interest rates and can they be lowered, and how does somebody go about, trying to do that?
Well, you can contact your credit card servicer. Typically, they're not going to lower your interest rate. There are some other options. that you can look at, and it's not necessarily with credit cards. There are some online services you can search for loans that are more consumer-based loans. You can look for other credit card companies' offers that come in to the mail, but it's difficult to take somebody who already has an existing relationship with you and try and get your rate lowered. I mean, the best thing to do is to just contact them and ask. But I haven't had very much luck with the clients that I've had trying to do that. They've usually had to switch to somebody else, and I know that we get a lot of offers that are 0% financing and things like that. That might be that might be an option for you.
Okay, great, thank you. And this is my question for you. You had mentioned going through and doing this itemization 30 days after the initial time that you do it. Is it something that needs to be done on a regular basis? I know you're going to be covering long-term planning in the next session, but in terms of breaking down, expenses and income, how often should somebody do it?
Monthly. I mean, in the minimum of monthly. I can tell you personally, I do it weekly. I go through and I look at my accounts to make sure to see how much money we have. I reconcile them. I always know what my expenses are. I keep a budget, a rolling budget like that too. I mean, but I look at it on an annual basis. So if you're going from uncertainty to certainty, we're going to look at your budget on an annual basis and then break down your budget month by month. But really going back, one of the keys is taking what you expected and comparing it to what actually happened, and then understanding the differences. Maybe you need to go back and make some changes to reducing your expenses, but maybe you just need to increase your budget. But budgeting is really important in terms of planning and really understanding your finances. I mean, when I talk to people and I ask them, how much did you spend last month? Most people don't know what it is, that number is. And so they'll say, I make a lot of money, but I don't know where it's going. The way to get to know where it's going is really to use budgeting. And for me, Mint has been a good tool to use, but I know that there's some others that people use too.
Is that a website, Mint? Is it like mint.com?
Mint.com. It's part of Intuit, who did Quicken and QuickBooks. Quicken is an option too. I think you have to buy the software, and I don't know if they have an online version of it, but it's all of those programs take information from your checking account or your savings account and your liabilities, your credit cards, and it will pull all that information into one place, and then you can allocate it, which means you can assign what type of expense they are. So if it comes in and if it's a clothing expense, sometimes it knows what it is, sometimes it does a really bad job of categorizing it. But once it learns what you have done, it knows it for the next time that you make that expense.
Great. Do you have, I wanted to make sure we put up your contact information, if you have that available to display?
I forgot to put it up.
It's okay. Well, maybe just say it. Yeah, if you say it, I can put it into the chat.
Okay. It's Lori at Laurel, LAURELWM.com. And I can be reached by email or my phone at 813-252-0799.
Real quick here, that's Lori at LaurelWM.com. Okay, I'm putting that into the chat right now. Okay. And that phone number again was
813-252-0799.
Okay. And I'm going to put the library's contact URL into the chat as well. We wanted to thank everybody for attending. Again, please do take a few minutes to fill out that survey. It only takes a couple of minutes and the feedback is very valuable. And with that, we're out of time. So thank you again, Lori. We really appreciate it.
Well, thank you very much for coming.
And have a good day, everybody.